Mr. Ringer. Pleasure to be sitting here with you. And you have both representatives of the Go Mortgage team.
Geoff with a G
Yep.
and
And
O with a
Owen with the O.
there you go.
Always on the go is our motto. And
Or with the Go team, we are driven to get you home.
boom, there you
There you
go.
go.
Taglines. He's the man.
2 for 1. 2 for 1 service.
And I mean, realistically, I think it's important that we use our expertise, use our knowledge, and share some information about what's been released today as far as some of the inflation data, and just have an open conversation to hopefully provide some insights, educate a little bit, and if you like what you see, give us a call and we can explain more. So starting off, I 8:30 this morning. I know you were here. I was here. We're
Uh,
reading through the.
were you here?
Whoa! I
You
got
if
here
you
8:45.
but I was already you haven't beat me here yet.
That's
Just saying.
that is it's very, very true. That's very true.
Alright.
So now you know if you need to reach somebody early in the morning, Geoff is your man from 5 a.m. till 10 o'clock at night. He's there. And I am too.
I don't know about 10 o'clock. I'm usually asleep, but that's alright.
But anyways, as far as inflation goes, big release this morning. Looks like everything came in as expected, 4.2% for inflation as
But
a whole.
you're right, but it's also oil's driving that.
Yeah. Oh yeah.
Oil's driving everything.
What are we up to? 90 some dollars on
No, I think it was $88 a barrel. So crude oil's down,
yeah. Okay.
but it's still inflation is still kind of a rocky little road, and that's what's causing oil's causing that, which is
Yeah.
everybody's saying rates are high. Well, I just locked in a conventional rate at 6.25
Yeah.
today.
Yeah. Oh yeah.
Today.
Yeah.
So that's it's not a bad rate. I can remember rates when I got in the business were 10 and a half and people were buying homes.
Yeah, and even still, back end of 23, I wanna say, what rates were at 7+%. I mean, they were incredibly high, and what did our business stop? I don't think
No,
so,
and
no.
and we both have buyers that are buying homes right now, and
Absolutely.
you know people are saying, "Oh, I'm going to wait for the rates to come down." You're not going to see 2.5 and 3% again,
No.
and we don't want to.
No, no,
And
not at
and
all.
and and a lot of people are like, "What do you mean?" Yes, we do. No, because of those low rates, inventory was really low because people didn't want to sell their homes. They
Exactly.
didn't want to give up that rate. They're realizing now that rate's not coming back. And if it does, buy a home now, we'll refinance you.
Exactly. And the biggest thing and the biggest piece that I can impart, just having been through that 2020 to 2022 or, early 2023 market, we saw home values go up. I wanna say the average was about 38%, 40%, I think is
So
just the number
somewhere in
that
that range, they go up, what do they say, 78% per
the
year? I mean, I'd
that
have
that
to
that
talk to the experts, which is an agent, as far as values and where they're going.
I think we were hitting 7 to 8%. In a normal market, you're seeing an average of about 3% annual, like, not return, but annual growth or annual build of equity.
And I don't know if I know you're seeing it. I'm seeing it where sellers are giving seller help.
Oh, yeah.
They're giving
It's back.
credits. That's back, and there's buyers that are wanting to buy. The problem is they can't find what they want.
Yeah.
That's because there's not a lot of inventory, what is out there, if it's a good product, doesn't last long.
Exactly. And I would say we have what, 10 files June and July. I think
You lost 2
yeah.
yesterday. Not
Yes.
that we lost them. Buyers, something happened, whether it was an inspection report or, they got cold feet.
Yeah.
They want well, we're going to wait for rates to come down.
Yeah.
I mean,
Yeah,
that's
2 yesterday, and I think how many of you,
I had 2 on Monday.
and those
Ratified offers. One was an inspection report. The other one, the buyers got cold feet, which I understand,
yeah,
especially first time buyers.
yeah, but they're actively looking, they're actively writing contracts because
Yeah.
they're not deterred, and that's part of what we give. The information that we're providing to these clients is to make sure that, hey, we know where they're comfortable as far as the monthly payment goes. I know for some, it's a little bit of a range. For others, it's a hard stop at a certain number. And we use that to provide a very accurate pre-approval to say, hey, don't exceed this sales price. If you do find the perfect house, let's look at the budget. Let's look at ways that we can bring this payment
And
down as much as possible.
right. And to the agents out there, one thing we do at the Go team is we don't just give a
Yeah.
pre-qualification. We like to see income and assets and credit. That way we can give a true pre-approval. So when you go to write the offer, you know, we give the mortgage commitment, which is huge.
Exactly. And a great thing about it too, and especially now, I think half the offers that we see going out, there's multiple offers involved.
What not to interrupt, but one
Yeah.
thing I saw this past weekend,
Yeah.
I had a client write an offer on a
Mhm.
Friday. You
Yeah.
remember the offer?
Yep.
And the
Yep.
sellers had an open house planned.
Yeah.
And they said, well, we want to wait to see how the open house goes. And the buyer said, you got a deadline, and buyers didn't want to wait. So they pulled back on it, which is okay. I get it. And we're here to support them.
Yeah, exactly. And the great thing is that when we go through this process, one of the things that we're doing to help everyone win their offers and executing at the highest level possible is speaking to the pre-approval and making sure that we have that commitment before you go and you write your offer. It allows us to close that loan as quickly as you need within legal limits. I think half the files we have right now are closing in 15 days, 15-day turnaround.
Yeah,
Yeah.
that's an exception, I think,
Yeah,
only because we can't control the appraisal.
exactly.
So an appraiser has 10 business days to get us the appraisal back once we order it.
Yeah,
Or not, I'm sorry, not once we order it, once they inspect it. I think.
correct.
So if an appraiser gets done on the third of the month, they got 10 business days to get us that report back. So I don't want to take a contract on the first of the month and settle the 15th. I don't want that stress. I'm losing my hair enough. I don't want to lose any
See,
more.
I got enough for both of us.
I
We'll be
know.
just
Well,
fine, man.
but we can definitely close a loan in 30 days or less.
Yeah.
If an agent of ours comes with a client, we got them pre-approved, and they go to write an offer, and the listing agent says, hey, here we are. It's the 10th. I want to close the 30th. We'll get it done.
Yeah.
We're not going to say no to that. We're going to bust our what to get that done.
And to kind of divert the conversation that we're having right now, and I think it's something really important that we need to start discussing for every agent out there, even potential buyers and consumers. One thing that you're starting to get your feet wet with, that I may have a little bit more experience, even though I'm, a little bit greener in the business, non-QM.
It's
But
I wouldn't know anything about it until I joined up with Owen. It's
Mm.
unbelievable. Talking about bank statement programs,
bank
and
statement, DSCRs, whatever,
whatever it
you
is.
want.
If you're self-employed and your tax returns, or you write a lot of stuff off, don't let that stop you from looking at buying a home, because call us. We'll find a program for them.
And I want to really just kind of get into the weeds for a little bit with you here, because I know a lot of the clients that we have, I've helped to educate on these products and everything. Now that you've really gotten you're diving in both feet, I want to say, how's the process been when you're going through it? Do you think it's similar to acquiring a regular mortgage?
In some cases, it might be easy
That's
because
exactly what I'm saying. Yeah,
because you don't need a lot of the documentation
exactly.
that you do with a W-2 employee or a salary employee and all of that. I mean, the bank statements prove the income, and it's a pretty quick process. So in some cases, it's
Yeah.
it's easier.
And I would say this, as far as what we've been seeing, a lot of the legwork comes from our side. We don't want you going out there. If we're using one of these unique programs, don't go out there and just write a contract without us getting our eyes on everything, making sure that we have everything lined up
And
for you.
and the main reason for that is we don't want buyers and clients falling in love with a house that they can't afford
Exactly.
or they can't qualify for.
Yes.
And if they do qualify, it's outside of their comfort level.
Right.
So that's why we like to have a conversation before they go out there and with an agent and looking at homes that, I mean, it's like you go to buy a car and you fall in love with a Mercedes Benz, but you can't afford it.
Exactly.
I mean,
No.
I'm going to, you know what I'm saying? That's not a good feeling.
Yeah, and one thing that I think is probably the elephant in the room for everybody that is going to see this video, is going to watch it and try and take away a couple key points. I know this was something that you asked me early on. Hey, non-QM, what are the rates looking like? For everybody out there, they are incredibly competitive. You're probably what, 0.5% above where you'd be at with
And
a typical
yeah,
financing?
yeah, it all, again, if we're comparing apples to apples with credit score and all that,
Yeah,
absolutely.
yeah,
What I like about today's non-QM market is you're not going to go through what we went through back in 2008,
No.
where you had short sales and foreclosures. Because let's be honest, back then in the early days, if you had a pulse and a credit score, you could buy.
See, this is why I need you. I had
And
never experienced that
we
before in
don't,
my
we
life.
don't, we don't want to. You don't want to see no income, no asset, stated income, stated asset. We don't want that, because that's what caused that market.
And to be very clear here, these loans, even though they are in the non-QM bucket, meaning non-qualified mortgage, they still are fully underwritten, fully vetted by our
There's that,
team.
right.
Um,
It's not a big risk for the buyer,
no,
because there are guidelines that we have to follow, but they're not hard guidelines.
exactly. And it's something that I've seen, especially for some of the more niche situations that we deal with, and I deal with. I think this. One of the doctors that I'm working with, she recently purchased the practice that she was employed with. She was a W-2 for probably the last 5 or 6 years. I can't
Yeah,
remember
yeah,
exactly.
yeah.
W-2 for the last 5 or 6 years. Purchased the business last year. Hopes to make more money, and she, looks like she is making more money now with standard financing. Your Fannie, your Freddie, FHA, USDA, VA. That would not fly.
No,
Eh,
but
but I
but now you're talking about
with a non-qualified mortgage,
it. It's not an issue.
it's not an issue because we're seeing that, hey, maybe she was making, $20,000, for the last couple of years, a salary of $240,000. Now that she owns this business, we're seeing the deposits that still line up with all of that.
You're talking about the bank statement
Yeah.
program.
Oh yeah. Yeah.
Yeah.
Bank statement program.
Yep.
Yeah. We're seeing deposits that line up with all of that, and it's a done deal. Rates
And,
a little bit higher, and
but they also can do their tax returns, take their write-offs, so where they're not showing a whole bunch of income that they have to pay taxes on. As
exactly.
long as the bank statements, whether it's a 12-month or 24-month program, we take those deposits. We determine their income, and that's what we can use to qualify. And it saves them a ton of money on their tax return.
And I think the biggest point here is that we at the Go team, we're going to find a place and a way to get the mortgage done. As long as we hit the major qualifying aspects, credit, income, and assets, we will find a way to do that loan.
And what I can say is, if we can't, over the years, we're not going to be afraid to say, sorry, no, we can't do this loan, because we're not going to drag the client along and the agent along thinking, yeah, go write a contract, we'll get it done. If we can't get it done, you're going to know up front.
Right.
And I'm okay with that,
I am too.
because the
Yeah.
last thing I want to do is have an agent with a client going out looking at homes, getting under contract, go in 2-3 weeks. You're all excited about buying the home, moving in, and we can't get it approved. We're never going to put clients or agents in that position.
And that's where the beauty of accountability comes in. As a team, we're here holding each other accountable to that same metric.
Now, we might argue a little bit about it, but at the end of the day, we give and take
Yeah.
what we can do. And that's what's so great about having Owen as a partner.
Yeah. And I would say the same about you, Geoff. It's really a pleasure.
Thank you, guys. Give us a call, Geoff Ricker, 443-532-1620.
Owen Garris, 443-422-9534.
And we are the Go team.
On
Thank
go.
you.
I think that was good.
Yeah.